The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, 877-927-6648. The first chart that I posted into Tiger TV today was the chart of IBM. Basil was talking about it before he left the air, and it's had a huge move here these last several days. It stayed down in that low range of that three-drive pattern for several days, and then it started to move sharply higher on Thursday. And as we talked about this last Thursday, by the way, the fact that we were coming into the last day of the month, which was Friday the 30th, and with that we had a situation where we had a excuse me, where we had a situation where we had the end of a quarter in an up month and an up week. It's almost impossible to get the market down under a situation like that, especially when the trend has been so strong. The second thing is that the strongest days of the month are the last day of the month and the first three trading days of the new month. If you go back to 1885 and look at all those statistics, you'll see that the most positive days of the month are the first 3 days of the month and the last day of the month. And I think it's even more accentuated now that we have so many ETFs and mutual funds and hedge funds and stuff like that that do window dressing and make decisions towards the end of the month. So I think that's accentuated it even more. So we'll have to see what's going to happen. Now, next Tuesday, we're going to come into one of the most important days in stock market history, folks. It's July the 8th. You won't believe this, but in July the 8th of 1932, the Dow was trading at 42. 42 and 32. 1932, it was trading at 42. Previously, 2.5 years before that, it was trading at 383 on September 3rd of 1929, and that started the crash that led to the Depression and World War II and, all the rest of the stuff that's now in the history books. I firmly believe that this market's going to end the same way. I don't know if it's going to go to 42, but they're going to hurt some people really badly here, folks. I can feel it in my bones. I can see it in the charts. And all I'm waiting for is to see how we get through these next couple of days here and then into the weekend. Now, remember, the day before the holiday, which is the July 4th, has a positive bias of about 75%, and we're only half a day that day. So that's the Thursday, should also be an up day. So we've got Tuesday, we're probably going to be up today. We're probably going to be up tomorrow. And then we'll come in Monday and Tuesday, and then we're going to come into that anniversary date. And W.D. Gann was very strong about anniversary dates, and this one has some astrological implications. But frankly, folks, these astros things that I've looked at over the last 5 or 6 hits that I've had have not worked. For the double P index date to not work on June 23rd and June 26th, for that not to work was really surprising to me, because those have a better than 80% probability of working, but it's a probability. That's all it is. There's nothing more than that. There's only one 100% indicator that I've ever found. It wasn't mine. It was Larry Williams. It's 100%, and that is the calculator indicator. And that indicator is this: when you go to your calculator to calculate how much money you're making in your short soybeans or your short corn or your short bonds, before you finish that calculator, pick up the telephone, what used to be a telephone, and get out of the position. Now you take a mouse click and do it. Larry Williams told me, he said that was the only thing that he found in all the years that he had done that came anywhere close to 100%. And I believe that. I've watched it. And what it is, it's a greed indicator, because when you're calculating how much money you're making, oh boy, you're really right at the green, right at that green line that pushes you over to the red line. I can remember on the weekend of March the 24th of 2000. I was in San Francisco at a conference. I believe Tom O'Brien was there. It was one of the big money shows. And the people were walking through the aisles there at the different booths, and they were all carrying their equity runs, showing him how much money they were making. I had 300 people in the room, and I was in a situation where we had all these patterns, completing much like we've been doing here for the last 7 or 8 weeks. And I got up on the table and I just started yelling at these folks. I said, folks, there's a freight train coming down the track, and you don't see it and you don't hear it. Be careful. I said, put your stops under last week's low, and if it goes below that, you're going to have a problem. So we're going to see what happens here to this market, but it's going to be fun. We're starting to see more volatility, and that's what's really interesting. Now I'm going to put the VIX index in because it looks to me like with this little 5-day cycle that's been in here, this 9-day cycle that's been in here, it looks like we're going to bottom here over the weekend, and we might even make new lows down below 10, which certainly could be going on, at that time. And we'll see if that's going to happen. But it looks like we're going to make one more lower low. There's a real positive bias here this last few days of the month, and coming into the holiday, it's really hard to get the market down. It would take some type of a really big announcement, or maybe even someone actually making a shot that things were going to back off a little bit. Even Chairman Yellen today said some type of comment, not like irrational exuberance, but it was something like that. But frankly, no matter what she says now, nobody's going to pay any attention because the market's in such a strong trend, it doesn't make any difference. It's when it turns over is when it's going to count. And, Isaac Newton, pretty smart dude back in the 17th century. He had several laws. One of them was number 3. For every action, there's an equal but opposite reaction. That's never been challenged. It always works. And also gravity. What goes up must come down. So we'll see. The only 2 times that hasn't happened is in London real estate and Hong Kong real estate. Folks, there was a place on Victoria Peak in Hong Kong over the weekend that sold for $20,000 a square foot. $20,000 a square foot. That is so hard to believe, because here in Arizona you can buy a nice house for $100 a square foot. So at $20,000 a square foot, you're looking at some real serious cost of owning property. So we'll see. They're having a big I think it's called a what do they call it? It's a big gathering in Hong Kong now about these folks want 1 vote per person. China hasn't allowed that, and they want to have 1 vote per person by 2017. And China says no way, and so they've arrested 500 people last night. They were expecting some really bad violence, but the military came in and calmed things down. But they are complaining about the fact that they don't get much of a vote when they're doing this thing that we see going on in here. Now the Nasdaq is on steroids, folks. This thing has gone farther than just about anything I've seen in a long time. It looks like silver at $49 an ounce, and there's been very little back off in it. So we'll see, what's going to happen with the Nasdaq by the time this thing goes over, because that'll be the one that will, when it drops, it'll be the one that will drop the most. So we'll wait and see. Now I have to show the one that I really enjoyed the most yesterday, because I always keep my the mute sign on. Not the mute. I keep the mute TV on so that I can watch if there's any news items of any kind. I can just glance over and see it. I don't listen to it, but because of the Dow being close to 17,000, I wanted to see what was going on, because at these key levels, whether it was 10,000, whatever it happened to be, that's neither here nor there. But I have to show you this, because I actually did not believe this chart. The fact that the Dow got to 16,998.50. It missed it by 1.5 points. That's equivalent of some fund manager buying 10,000 shares of IBM. And that would have got it over the fact of 17,000. They were acting like little giddish kids on the 4th of July on the floor of the New York Stock Exchange, high-fiving and everything with the Dow at 17,000, and that doesn't mean anything. 10,000, 11,000, 12,000, 13,000, none of those meant anything, and 17,000 is not going to make any difference either. But they thought this was a come-to-Jesus moment yesterday. Now, I don't know if it's going to happen yet, but we'll have to wait and see. Okay, we got a caller from the home office, Clearwater, Florida. David, are you there?
I am here, Larry. How are you today, sir?
Very good. What can I do for you, my friend?
I just wanted to, it's more of something I just wanted to point out because, I know a lot of the patterns, especially the 5-point reverse wave, because I've been, following a lot of the patterns that you taught me, if you recall. I took a couple classes from you over the years, and I've learned quite a bit. One thing I wanted to point out, because like I said, I don't know how the pattern's going to hold, because short in this market's been nothing less than a pain amplifier, because it's been in such a strong bull run for quite some time. And as a result, but I just kind of want to point this out. If you put the S&P, and put the cash S&P, the SPX, and you put it up on a monthly,
yes,
and you take it back several years, about 5+ years, what you'll see, I believe what you'll see, is that on the low, the more recent low, March 1st, 2009, on the monthly, the month of March, is your A point. I'm saying that the B point is the month of April in 2011. The
Yes.
C point would be the October month of 2011. And the D point being, so far at least at any rate, the month of July here, 2014. And what you'll see, I think you'll see, what I see is that the C to D of that ABC up is a 1.272 expansion of the A to B leg, and it looks like it's finishing in right at that point. So looking at it from a potential butterfly, taking the X point back to October 2007, it looks like it's in between the 1.27 and the 1.618 of the October to 2007 to March 2009 move down. I don't know, Larry. I mean, like I said, short in this market's been nothing less than a pain amplifier, but we might actually have a point where we'll see at least some form of a
I'm looking for 2 days down. No,
aren't we all?
I'm being sarcastic, but what I did do, I don't have the SPX in front of me, but I do have that same chart that you were talking about, the monthly Dow Jones Industrials, and they've gone hand in hand. The Dow's been weaker than the S&P, but it's still done the same thing. We got to pay some bills here, David. Could you stay with us till we come back? We've got Arch Crawford coming on at the break, folks, so stay with me, David.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we have David from Clearwater on, and at the break we're going to have Arch Crawford from Crawford Perspectives on. David, I have a question for you. I know you're a very good technician. How do you view this as lack of volume that we've had in this bull market? Never have we had one like this where the volume is just dissipated. It's really a mystery to me. I've not been able to put my handle on it, but do you have any feedback on why you think the volume is so low?
I can only give you my guess. I think what it is there's a certain percentage of the population in the United States that got so severely burned in the downturn of the financial panic. Shouldn't say financial panic, after the subprime mortgage fiasco that then bled into the capital markets. My take on it is they were so severely burned on it that they've been unwilling to put their money back into it. So a lot of this money has been sitting in money market accounts through their 401k plans, and they've been very, very hesitant to put it back in, which would then cause the fund managers to buy. I think what we've seen through what started under Ben Bernanke and has now led over to Janet Yellen is the quantitative easing has pushed down interest rates down to the point that the world is awash in liquidity looking for a return. And what we've seen is a bank-fueled rally, in my interpretation, a bank-fueled rally over the last 4 to 5 years. And I think what's probably going to happen, and I have obviously no way of knowing this, this is just my personal opinion, but as the market gets to ever higher highs, you see some of the retail investors, everyday Mr. and Mrs. Jones, now starting to put some money back in. And I think, because at some point in time there has to be a decent correction. And the market's run up so much that even just a basic 382, which would be nothing wrong with this bull market, just a basic, a retracement on a 382 is so substantial that it would trigger off a sell once again and scare off a lot of these, mom and pop retail investors that participated in the bull run of the 90s and 80s and into the early 2000s. But the dot-com bust, was the analogy of like a kid who touches the stove. The dot-com bust hits, boom. I touched the stove, got my hand burned, put it back in, the subprime mortgage fiasco that caused a sell-off, in the 07-08 time frame into 09. Touched the stove again, got burned, and there's a good percentage of people out there that I talk to, at least, because I'm a very outgoing person, and I talk with a lot of people in my career. I meet a lot of people, and you hear words like the market's rigged. It's just for the banks know when they're going to run it up, and the banks know when they're going to run it down, and they're just running it up to get us back in so they can take our money again. And I got to tell you, Larry, it's not there isn't a little kernel of truth to that comment, but that's my particular take. I think what we're going to see is at some point in time, the quantitative easing programs are coming to an end. I think inflation, after this tremendous amount of digital printing, digitally, of course, done by Ben Bernanke over the last several years and carried over by Janet Yellen, is going to stoke inflation. The money supply is tremendous, but there isn't any velocity. I think as the velocity slowly but surely comes into being, we will see inflation, or core inflation. I mean, we've seen inflation already in the price of oil, the price of food, as the dollar is devalued, and I think to a certain extent core inflation is coming. Although it's subdued, it is coming, and at that point the Federal Reserve will have to raise rates.
Well, eventually, they have almost zero rates in Europe too, so it's going to be very interesting, to see what's happening. So it's going to be I think you're going to see it is going to be different this time. I'm really excited to see how this thing is finally going to end, but I'll be ready, and I know I'm going to be able to participate in it. I was ready in 2000, I was ready in 2007, and I'm in my 7th furlong of an 8th furlong race, so this might be my last dance, so I'm really ready for this one. I've been waiting, and I'm just I'm looking at probably coming in on Monday or Tuesday, and starting to look at the short side of the market. But I got to get through this weekend because of all this positive bias that's out here. It's just really pretty tough.
Well, what's your take on it? You've been doing this a lot longer than I have.
I have no idea. I have friends in this business for 50 years that know a hell of a lot more than I do, David, and they don't know either. That's a mystery. It's a mystery to them too. Even the commodity business is slowed off a little bit too, and that shouldn't have happened. So it's just the money has to be going somewhere. I personally think that the Federal Reserve has made one of the biggest all-in bets that they've ever made in history, and it's going to come back and bite them on the kabuki. And I think that's what the problem is going to really accentuate. Thanks for calling in, David. I really appreciate it, buddy. You bet. Arch Crawford at the break, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and we've got our good friend, well, at least he's my good friend, Arch Crawford from Tucson, Arizona. Arch, are you there?
Yes, I am.
How are you, my friend?
At your service,
How are you today?
Pretty good.
That's good. Listen, we were
we're
talking
suffering
about
terribly from a Venus trine Mars.
What does that do?
Venus trine Mars is a lot of fun with the opposite sex.
Well, that's better than the same sex, Arch. I'll have to go with you on that one.
Well, after reading the newspapers, I'm not sure anymore.
I think we better change the color of the show here. They're gonna bleep us off like they used to in the old days. Sam, what do you think about the this lack of volume on this rally here, and the fact that this market just doesn't have a whole lot of players like we used to have when we had tops like this?
Well, it's the most unusual thing I've ever seen, and I am of the belief it's being totally manipulated.
Manipulated in what way? Just by the Federal Reserve, you mean?
Yes. Not just that they're buying bonds, but they're actually messing with the futures.
Oh, I'm sure they mess with the futures. I know they have well over 200 traders that work for the bank, and I actually met one once, and so I imagine that happens more than what we think at certain times, but. What is your overall feeling of the market, Sam? I mean, from an astrological point of view and technical point, because you've been around longer than I have, even though we're the same age. Actually, you happen to be a few months older than me, but we won't mention that on the air.
Okay.
But what do you think about the technical nature of where we stand right now with advanced declines, new highs, new lows? What's your overall feeling, and particularly the astrology things?
Well, you asked me about the volume, and I feel the same way about the volume as the new highs on the New York Stock Exchange and several other technical things that are not following through if this was supposedly a strong bull market. But the averages keep making new highs, and on the short term, we have the NASDAQ acting better than the S&P, and the S&P acting better than the Dow Jones, and that is a short-term positive. When the Dow Jones is leading, the S&P is following, and the NASDAQ is acting the worst. That's very bearish. So that's the situation now. Is it can carry further. Now, I'm looking ahead at the Bradley model top, and I have like the middle of July.
Yes, I see the same thing. Sometime between the 8th and the 15th, it looks like there's some pretty heavy things that are happening at that point.
Yes. So that will add to the astronomic-related data in the negative. We also have, I think, on the there's one day coming up, the 20th and 21st, I think it is. It's option expiration. No, I've got the. There's a station of Uranus and Saturn 2 days apart, and the station is quincunx, or 150 degrees from each other. So they'll be both slowing down and stopping in a fairly negative aspect around the. I've forgotten the date. I mentioned it in the last letter, and I can't find it real quickly here. But it's around the middle of the month. So,
Sam, if the folks would like to see a sample of your newsletter, how do they reach you?
Well, the current copy is right now on the website. So the next one will be out July the 7th, and the June one is I put it on the other day, and it's at CrawfordPerspectives.com, www.CrawfordPerspectives.com. And if you don't want to print that out, just Google Arch Crawford, and you'll be one of the first 2 or 3.
Okay. I have one other question, Sam. I know you're a big speculator in gold. What's your feeling of the gold market?
Just remember
gold
to
and silver
Google
here?
Arch Crawford.
Arch Crawford, okay. Not Sam Crawford.
Right.
Okay. What do you think of gold here, Sam?
It's acting better than it has in a long while, but I'm not as bullish as a bunch of analysts have jumped on the bullish side, and I'm not that bullish yet. Because we went above the 50 and 200-day moving averages, and we did that before in February, March, and then we got up right short of 1,400 and fell back. So it's been in a pretty large triangular pattern. It's more or less a head and shoulder with the or a double bottom. It's trying to make a head and shoulder, and it's not quite, but it looks very much like one. But we have not yet broken the neckline, or at this point it may be the top of the triangle, which is now at about 1365 or 70.
Yeah, that's what I'm looking at.
I'd like to see that broken on momentum and volume, again like the other day when we went up $40. I want to see better technical action.
I've been noticing that we've had very little of that in the commodity markets, too. Even the grain markets, when they broke badly, there's hardly any participation other than longs, exiting their position. So I'm like you. I think if gold can ever get above that 1380 per ounce, it's got a really good chance because if this funny money that they've been printing for years now ever comes to roost, it's going to be crazy. Sam, can you imagine?
3,500 to 5,000 if
Sam,
it goes up as much money as they've been printing.
Yeah, Arch, where do you think gold would be if we were back in the 79, 80 era when we used to follow M1, M2? gold would probably be at $6,000 an ounce, I would think.
Yeah,
because
I just said it'd be between 3,500 and 5,000, but it could be infinity if the dollar cracks. Now, Stansberry has online somewhere where he's saying that as of July 1st, which is the new fiscal year for the federal government, that a lot more regulations are going to become active through Obamacare. And he says that's going to be very damaging to the dollar. Now, the dollar broke fairly sharply on I think it was the 30th. Maybe some people are anticipating that, or maybe some people are listening to him, but I don't know how long it will take for people to realize how much the danger is for the dollar. But the dollar is acting very poorly and has been for a long while. So I'm very negative on the dollar.
Where would you put? What would be your alternative currencies, Arch, if you were not going to keep it in the dollar? You wouldn't put it in the euro, would you? No. I would spread it around, or have an increasing amount in the of solid long term in the gold and silver. Okay. I'm just a little concerned about the very short term right now, but I'm not concerned about the long term. Gold and silver you can put more in. I've got some yen, and I've got some pesos, and I've got some dinar. Well, I know that you certainly speculate in gold and silver quite a bit, and I really wanted to get your feeling on it, and I certainly appreciate it. The strongest thing happening in the gold and silver is that Jupiter is going to be at the cusp of Leo on the 16th, and that will blow it through in a big way. I remember when Saturn was on there, it dropped the gold. That was years and years ago. But Jupiter being on the cusp of Leo could put a top in the stock market with ebullience towards equities and ebullience towards the metal, because the Leo is ruled by the sun, which rules gold. Mm-hmm. So that's a date to watch for a large swing as we go into that, and as we come out of that, it could continue up, or it could have a spike up and then turn back down briefly. But watch that date on the 16th. Well, we certainly will do that for sure. Now, Arch, I want to thank you for... And other characteristics in the stock market. I mentioned in the last letter that every one of the 7 largest volume days in the NASDAQ was a down day. And that is unheard of. You've never seen a bull market with the biggest volume days all on the downside. That's strange. It's ridiculous. It's strange. It's impossible. By natural means, it's impossible. Arch, I want to ask you a question. You still talk to Richard Russell, correct? I haven't actually spoken with Richard in a while. We've been exchanging letters since, the early days of the late 70s. I know that, but now with the Dow theory, we've had new highs in the transportation, new highs in the utilities, new highs in the Dow Jones industrials. I mean, all the green lights are on for sure. Yeah. I know that he is just wild about the gold and silver, and he's not wild about the stock market, even with the things that are going on. I don't like these confirmations taking place on very lower and lower volume. It just doesn't make sense. It's never happened before, and it's not legitimate now, I don't think. But short-term, anything can happen. Well, we're going to see some really big shocks. I really see that coming, because there's so much complacency there that the market has always done this in the past. I mean, Newton's law of gravity has not been repealed as of yet. Well, there are a lot of statistics that are just getting back to where they were in 2007. And if I remember correctly, the top was like early December, and it was almost a double top with a slightly lower high in October of 2007. So all these statistics are getting
back. They're saying, oh, these are great statistics. Well, they're getting right back to where they were at the top.
Yeah, that's for sure. Well, listen, I wanted
on
to thank...
On the cover of the June letter, I have a chart of the TYX, which is the 10-year rate on the bonds.
Oh, yeah, the notes. Yes, I watched that myself, yes.
And if you look at the front page of the paper, it's got, of the Crawford Perspectives, June 2nd, it has some trend lines, and it had just gotten down to that trend line support at, and the price was $331 June 2nd when I wrote this letter, and it popped up from there to about, I don't know, 265, 67, somewhere like that, from the 231. No, it popped up to 350 and is now 345 because this is the 30-year bond. Sorry, it's on the 30-year. It came exactly down to the trend line June 2nd, and it's popped up from there at 331. It's now 345, but it's been as high as 350. So the rates are both all above their 50-day moving average, which it's not breaking out yet. It's got to break above some recent highs and the 200-day moving average, which is still on the 10-year, it's about 270. On the 30-year, it's about 363. So we are watching all these things carefully. But I just feel that something is building up in the world in such a terrible way that all of these things that are almost happening are all going to happen on the same day, and it's going to be some kind of power grab, and it's going to scare the pee out of a lot of people.
Sam, I want to thank you for showing up today, buddy. I really appreciate it, and I want to wish you the best of luck.
Thanks much. I hope the people will enjoy the copy of the letter.
All right. Thank you, sir.
Bye-bye.
You bet. That was Arch Crawford of Crawford Perspectives here in Tucson, Arizona, www.crawfordperspectives.com. He's been doing this since 1961. Sam is his actual name is Samuel Archibald Arrington Hicks Crawford, and his nickname is Sam. So when I talk to him on the air here, I refer to him as Sam, and his name is Arch, and that's what I should probably call him on the air, but he's a good friend, so I call him by his nickname, which is Sam. We have a caller from Cheyenne, Wyoming. Larry, are you there?
Yeah. Hi, Larry. I wanted to comment on what you've been talking about, how odd it is the markets are going up. I came across a website run by Marty Chernard called StockTiming.com, and I called him yesterday, and we spoke for about 20 minutes, and all he does analytically is monitor really fund flows, institutional buying and selling, and he says it's odd. He said to me, bottom line is the Fed is fighting for its life here to get the Democrats in office in the fall. And so he has unusual parameters, too, where institutions are selling since mid-June, and it's being offset by
Larry.
buying. Yeah.
Larry, we got to pay some bills. Stay on. I want to hear more about this. Stay with us, okay?
Yeah.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we got Larry from Cheyenne, Wyoming on, and you were telling us about the Federal Reserve is trying to get the Democrats elected like they need any help.
What's interesting is he monitors a lot like Lowry's institutional buying and selling, but in a different way. He also sort of quantifies option liquidity, and I'm looking at charts now that are in sell mode, and yet the markets are levitating. I mean, according to him, he's got his subscribers, if they want to be long, he doesn't recommend it, but be hedged. And you can look at the long-term charts he has. It's unbelievable. You've got markets moving inverse to institutional selling, and the thing is pointing at a 45-degree straight-up angle, meaning it's distribution by institutions, and yet the markets are levitating. And he just says in words, whatever the data says, the Fed is struggling like crazy to keep this market up. That's for their job. The
thing I've always said, Larry, is if this thing was really this good, why haven't they been doing this since 1913? We could have avoided every recession. We used to have recessions every 4 to 6 years, just like clockwork back with the old Wheelers, the Wheeler stock market cycle and stuff. And they've skewed everything this time, starting in 2009, and they're going to pay the price for this. This is going to be a big one.
Well, it's going to be a big one because at some point, that's the point, they'll lose control eventually. Same with interest rates. But nobody knows when or how it'll look. Yeah. I mean, he said it's a very tenuous, dangerous market. Very.
Well, I agree with that. Anytime you have a market that's going up with new highs and new lows not confirming and no volume, I mean, you have to have players to build the pressure cooker, and we're not having any of those things occurring.
Well, I just wanted to contribute because it is about the Fed. I mean,
I don't think there's any question. When you put $4 trillion in it, I mean, that's a lot of money.
It's about the Fed and the patterns. Who knows these patterns that we trade here, they keep working, but there could come a day where they just don't. I don't know.
No, I don't believe that'll happen because I've looked at every single market that's liquid that has people with fear and greed in it. The patterns are going to be there because they're just so natural. Yeah. I mean, if they stop working, I'm going to be out of business because I've been doing this for a long time, and I'm thank God we've got things that move around besides stocks. We had wonderful moves in soybeans to the downside. We had a great move in gold here recently, and a really nice move in crude. So those things pay all the bills. Yeah. But I look for that big move like I've caught in 2000 and 2007, and I know it's coming. And I've paid the price here, and I probably lost a few friends. But they'll come back once it turns down. There'll be a down day sometime in this year. I've made that prediction. There will be a stock market down day where it's negative. I don't know when it's going to be, but it'll be this year.
Well, I asked the guy, I said, do you think this market will be higher or lower through September? And he said that would be pure speculation, but there's nothing. I mean, but really, you don't have to be a technician. I mean, I struggle at this, but I mean, I can just look at this data and just say it's going the opposite way of the market as it used to just even 6 months ago. It's gotten that much more intense. There's struggles to hold this up,
Indeed.
So,
Hey, listen, thanks for calling in, Larry.
Yeah.
You bet. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.